Right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, what we're talking about is the decaying, the disgraceful, no, I'm just kidding. We are talking about decaying stocks and stock decay in high yielding dividends. And the reason we're talking about this is because there's such a destructive mindset around high yielding stocks. Sure, it might be true. Some stocks, they do depreciate down and they do not return all of their their yield back to shareholders. But in this video, what we're going to talk about is some plays that have potentially, like QYLD, have gone down over time historically, but have good capital returns, and I will calculate that in a second, because of the high dividend yielding distributions that they pay. And what I'm going to talk about in this video is a kind of general consensus around high yielding dividend stocks compared to, let's say, low yielding dividend stocks, and why most people tend to shy away. But really, if you are invested, you are an interested investor and you kind of keep track of your investments, you keep on top and you reinvest, how high yielding dividends can actually be a pretty significant boost to your portfolio. Now, if that all sounds good, please do remember to subscribe. We're up to 3,550 subscribers, past that 355 mark right there. So I want to say that is awesome, and 1 out of 10 on our last video. So that is great. Congratulations to everyone who watched that video, contributed. You guys are all not 1 out of 10s. You guys are all 10 out of 10s. Ignore that. Okay, so to get into this video, I brought up QYLD as a little bit of an example because QYLD, look, they started about $25, say $26. They have depreciated over the past 10 years from February, let's say 2014 down to now, which is 2023. That's about 9 years. They've gone down from $25 to roughly $17. Now, when we put that in, we'll do 25 divided by roughly 17. We're just doing some rough numbers here. You could see that that is a downtrend of roughly about 47% or so on the share price. That obviously is a little subject to change. That calculation might be off a little bit. It might be closer to 35% really. But when we're looking at this, the share price has obviously taken a big hit over time. But what people have to understand too is they've been paying a 12% dividend over the course of that time. So when we calculate that in, and we're keeping the 47% in mind, but we do 12 times 9, you can see that that's 108. And when we subtract the let's say 47% that we took off there, that returns us a 61% yield over the course of about 9 years. Now, that might not sound like the greatest return at all, which honestly it isn't, because the Dow Jones, why not just invest in that or an ETF like VOO? Because historically, over the past like 20 to 30 years and beyond that, really, for the history of the stock market, they performed about 7% every single year. When taking that 61% and actually dividing it by 9 to give us our percent year return, you can see it's actually less than 7%. But that only accounts for the dividends that you have received over time. That does not account for any reinvestment. And that is where the high dividend yields really kick off. Stocks and ETFs like TSLY, for example, when you reinvest, you see the compounding effect that those high dividend yields have. And it's totally true for the same thing with QYLD. If you were to compound your dividends and reinvest them in a QYLD over the past 9 years, I am certain you will be way above this 6.7 year return and pretty much the average return of the Dow Jones for QYLD. This cannot be said, and the same for TSLY, even though they have a pretty high yield, close to about 60-70%, because obviously TSLY does not have the history behind it in order to back it up, but QYLD does. Now, I actually own many high dividend yielding portfolios, stocks in my portfolio. So I have TSLY, QQY, CONY Clip, and also USOY. I would consider that as well. Even though it says 13%, it's really probably closer up to about 30%. Now, the reason why is because I'm allowing the dividend snowball to compound. And the reason is because once you get that snowball rolling, it is definitely hard to stop. And with this $200 every single month, I could then reinvest into more long-term plays. That is kind of the goal here. And that is how you could really use, obviously, decaying but high dividend yielding stocks in order to generate cash flow to then buy maybe safer yielding investments or more long-term investments. Now, obviously, when we're comparing high to low dividends, you can see here, even on this chart, we have AT&T. I actually do own shares of AT&T. They have a dividend of about 6%, so nothing too crazy, right? But when looking here, you can see that $57,000 would be put into Microsoft in order to earn $500, right? Well, with Coney, you put in $500 at a 113% dividend yield, whatever they're paying right now, and you're actually receiving more than $500. You're receiving like $600. But obviously, that is totally not true. That is just because they had a really amazing month this month. But it shows you the real power of high dividends, how you need so much more money in a lower yielding investment in order to return that cash flow. Now, of course, there's probably a lot more risk that goes into playing TSLY, QQQY, or Coney than Microsoft or Starbucks or McDonald's, for example. The risk is always there with investing, but obviously the risk is limited to you if you don't know what you're doing. But this was just a little video to show you how decaying stocks over time could potentially return good returns. It's not all just a downtrend if you reinvest over time. But there are definitely stocks, for example, one being ORC, which I can actually search out right here, that I'm not a huge fan of. I think over time, this is a decaying high yielding dividend stock, but they were also cutting their dividend at the same time, which led to lower yields. And over time, I think ORC was a pretty big loss. So you do have to be careful when you're investing in your high dividend yielding decaying stocks. But the reinvestment is where the real magic happens. And that is really where you get these compounding and snowballing dividend yields and obviously your kind of money from that. So I hope you guys did enjoy this video and it got you a little sense on some high yielding decaying stocks and how they could potentially be good investments if you reinvest and you play them for the long term, obviously. But don't take any of this as advice. I'm just a guy on YouTube sharing my opinion and what I believe to potentially be true. So if you guys did enjoy this video, please do remember to subscribe. We're up to 3,551 subscribers. I know we can get that up, guys. I want to say thank you guys for watching, staying along. I hope you guys do take care. Have a great day, and I will see you guys in the next one.